All right, we're live. Hello, guys. I'm back again. Apologies, it's been a while since I got on this. It's a lives, whatever. One can't always make these videos, but I'm back now, back to trading, and it's been a wonderful past few months. So, I just wanted to share my overview on my trades on gold. I wanted to use my phone. At first, I wanted to use my laptop to make this video, but I decided to use my phone. But that didn't really work. It wasn't really giving me what I wanted, so I decided to use my laptop. I just went back to my initial idea. So I'm just gonna be breaking down. Back to the video. I'm just gonna be breaking down my trades on gold, what I was looking at, and what I took, and what generally actually happened. Okay, so I like to mark up my charts. I like to mark up my charts very simple, a simplified markup of my charts, and not with a lot of detailed explanation. That's just how I mark up my charts. So we'll be getting right into it. So first off, we should know that gold has been on a bull run. It's broken its all-time highs a very long time ago. Gold's broken its all-time highs a very long time ago. So it's been very bullish. So we can say from this point, the 30th of September, gold made a recent all-time high. Um, from the 30th of September, 2025, it made a recent all-time high. And because we do not have technical data back tested, or any actual technical data out there on the supply zones, or on the levels, psychological levels, or whatever it may be, whatever you may want to call it, to give us a kind of assurance, or a kind of something to look at, to for a reason to see that, okay, gold could sell at this level. Because we don't have any data backing that up, we as technical traders just know that after an accumulation, there should be a distribution, but we don't know exactly when the distribution may occur. That's just the problem, because gold is just on a bullish run, and it's past its all-time highs. So there is no data in the past telling us that, okay, at this point there was a supply zone in the past. So gold taking out that level, or getting to that level, might distribute or redistribute at that level. So we don't have any data to back that up. So we could only maybe tell from the fundamentals, from news releases and all that. That's what we could actually. That's what we could tell. But I think this drop that happened, this was FOMC. I think so. I think this was FOMC news. If I remember correctly, and it dropped, but still gold has been very bullish despite the news release. And part of the reason that gold has been quite bullish is because, for me, I call gold the ever buy pair, the ever long pair. It just keeps going up, because most of these federations, these financial institutions, these reserves, they are the major holders of gold. Okay, they're the major holders of gold, and if it's their asset, they would definitely want the value of that asset to continue to escalate in price and to go up. It's just natural. So that's one of the reasons. And number two reason is because gold was the back in the day, back in the old times, gold was the standard means of payment for people. Okay, they paid in gold and in silver, in valuable coins. Okay, that was the standard instrument of payment. So now that the fiat currency, inflation, and hyperinflation, and all these other economic factors are coming into play and affecting fiat currency, affecting fiat paper money, it's actually a reason why people are going back to gold and saying, no, give us gold. We want gold. Okay. So that's why the price is going up higher. You can if you check the news, you see a lot of people, a lot of countries are ordering ounces of gold. So the demand for gold is increasing. That's why the chart is just representing that it's going higher. So back to the video. Let me just break down what I was looking at. So from this point, gold made the highest high, then it dropped all the way down. Okay, taking out this liquidity. I put these boxes here to indicate liquidity because retail traders were buying, and they were buying, and price was going up, and you can't blame them because gold has been bullish. You see this strong bullish move to the upside, not really giving any retracement or any re-entry uh, for momentum to the upside. So it's just been going up. So they were buying too. Maybe any entry they get, they take it and they were buying. But we got to a level and we just sank down, took all this liquidity. And when we took all the liquidity, you could see a massive gap up. And we broke that structure, indicating bullishness in price. Now, I apologize for the background noise, by the way. Apologies for the background noise, but it's where I'm recording, so just bear with me. So back to the video. There was a break in price. There was a break in price, a break in structure to the upside. So we retraced. I was thinking, but before we retraced, yeah, we retraced 2 days after. Before we retraced, yeah, I was thinking this looks like a beacon to me, right? Because I'm an SMC trader, and from what I've learned here, price should come back to mitigate this before moving higher, or at least it should come back to do something to this, even if it might take it out or whatever. But for some reason, I believed the price was gonna come back here. Why? Because you see, for this liquidity to be taken out, yeah, it took the institutions to put their own money into the market to take out all these retail buyers, take out all their money because this is a game of liquidity. The price moves just basically to take our money and basically to try to take our money and to also balance price and just give us a standard of the actual price of an asset in a particular period of time. So, be it an asset, a commodity, whatever. So, basically, their money is still stuck in here, right? So, if they kept going up, they'll be in huge drawdown, right? And it could be billions of dollars that's in here, right? Billions of dollars that's going to be in drawdown. So they don't like to lose. So they're gonna come back, take their money, mitigate, break even, or take a little bit of profit, then commence with whatever they want to do or move price. So I had my eyes on this level, and guess what happened? They came back. There was so much, but before they came back, they created so much liquidity. Okay, I'm using these boxes to indicate liquidity. Okay, there was so much liquidity riding on these lows. First off, they took out the sellers because people were selling from here. After this high might have been was taken, people might have been thinking that okay, we could sell now, because there are traders who also believe that we could sell into this point, but they don't want you to be in the trade. So for the early sellers, they firstly took them out before they sold. But let's say someone, and when they mitigated, right? See what happened. Price longed around. Price longed for like 23,000 points, 23,000 points plus 23,000 plus points. So with 0.01, you would have made $237, maybe even more. Am I even saying this correctly? Yeah, you would have made $237, maybe even more. So with 0.01, the lowest lot size. But I mean, the risk was very high. But I noticed that the risk was 28 pips. But I noticed that with gold, yeah, especially gold, it tends to give high risk when there's a high reward. It tends to give high risk when there's a high reward. So assuming you were looking for extra confirmation, what one would have done is that when gold got here, you would have waited for something like an engulfing pattern, like an engulfing candle. So, and that was what happened. Immediately, gold got here, at least on the 1 hour, we had this engulfing pattern, and it came down to test it, and then we went all the way up. And if you were testing your entry from here, you could have just put it at the close, $16 or $17 or $22. From 28 to 16 or 22. It's fairer. It's more fair that way, and you could have immediately targeted these highs, $50, 50 pips. But obviously, we know we're gonna make a higher high. See where price eventually ended up going to. So if you know your thing, yeah, you would eventually get reward from the market. So that was one thing I was looking at. And though I think I took buys from here, yeah, I took buys from here, but I closed around here. I didn't ride it all the way. Now, yeah, this was another area that I was looking at. Why was I looking at this area? Simply because after we had gone up, we had accumulated and pushed to the upside. We kind of had this break of something, it's almost like a break of structure on the 1 hour, but it was like a fake out. It was more like a complex pullback to continue going higher. So this area right here, if you look at it on maybe a higher time frame, like the 4 hour, what was it again? Okay, yeah. If you look at it on the 4 hour, I think it was around here. This area right here was the last base. It was a rally base rally. It was the last base. Okay, you can see it on the 4 hour. It was the last red candle before this bullish move, the last down candle that took out liquidity before a move to the upside, before a volatile move to the upside. And what did we do? We set up liquidity. We set up liquidity. So I was like, I'm going to go back to the 1 hour. So I was like, okay, I was also looking down here. I've actually cut a lot of sales on gold recently. So I was looking down here and I was thinking to myself, I was like, okay, gold could definitely come down here. Okay, come down here and see what happened. We created this liquidity. We did the markup phase, markdown phase, and we dropped straight there. Though we did take some time before rallying to the upside, but we didn't go below this low. We saved at this low. We didn't go below this low. You can see it. We didn't go below this low, this point, and we rallied to the upside. So if someone also entered a long position from here, that was what was going to happen. A good trade, a very good trade, and we've been going up since then. Now this is a trade I personally took. This was on the 21st of October. Okay. So for some reason, yeah, I think it was on the 4 hour. Yeah, yeah, it was on the 4 hour. My eyes, this was my general target. Yeah, but we can never be too sure. I wasn't sure gold was going to reach it, but in my mind, I was also saying gold should come down here. But before that, I had here in mind, and I had here. I also had here in mind. I also had here in mind. So I was thinking that I would take immediate take profits from here. Okay. I was thinking that I would take immediate take profits from this zone. From this zone. So at least I was thinking to myself that okay, at least price would reach there. Okay. We have this beacon candle in here, this little candle in here that's disguising itself when this is the actual target that they want to take out, which they did. So on the 15 minute, yeah, I was looking at it on the 5 minute though. Like I said, we don't have any past data on if on the distributions of gold right now. We only have past data on the accumulation of gold, the support levels. We don't have any resistance levels. Resistance, my bad. Resistance levels. So this was what I saw, yeah. I marked this out and I called it the previous day's high or also all-time high, right? And then when we got there, right, there was this aggressive sell candle. Normally we would wait one should wait for at least a break of structure, which we got around here. Okay, which we got around here. Okay, we got that break of structure. So, but before that break of structure, I think I had entered already. I was more aggressive on this trade because I saw that there was reasons for us to come to the downside. Because I indicated this 4 hour, because I indicated this 4 hour candle, this 4 hour candle. And if you look at it, the I don't like to use this reason, but the buys were kind of shorting out. Yeah, the buys were kind of shorting out. They were getting it got smaller at this point. Like not a lot of people were still buying at this point. So and the next candle that happened was that showed was kind of like a doji. So it kind of let us know that sellers were starting to enter the market. And I just felt like, okay, you know what? we've gotten to this level, right? And we've kind of broken above, because if you look at this wick, right, we took liquidity. We kind of took some liquidity off the highs, right? We took some liquidity off the highs. What really made me sell was the fact that we closed on the 4 hour time frame. We closed below. Yeah, we did. We managed to take some liquidity from the highs. And when price usually does that, if it takes liquidity from lows, it reacts and moves the opposite direction. If it takes liquidity from a low, it reacts and moves higher. If it takes liquidity from a high, it usually reacts and moves lower. So we took liquidity from the highs, yeah? And we also closed below this high. We closed below the high. So I felt we could at least target in here. And then when I went to the 15 minute, when I went to the 15 minute, okay, price had engulfed this and had another down candle, okay? But I was still patient. When I saw this, when I saw this violent move to the downside, I kind of was confirmed. I started rubbing my hands a little bit. I was like, okay, I see that we could at least drop all the way down to this marked line in here. And if you could see, yeah, we had a free run because there was FVGs all over the place. FVGs from here all the way to here, you know, fair value gap, inefficiency all the way down. So when that happened, yeah, I waited for a retest. I would have liked to get a retest in here, but that didn't happen. So since the retest in here happened, but we didn't quite enter, we didn't quite get there, I did not enter. I was waiting for another confirmation. I wanted to see what would happen after. So I got this bearish engulfing candle. So after the bearish engulfing candle, I was like, okay, I can enter now. It seems that price is rejecting to go higher. And I believe that okay, these were the last set of buys before this up move, before this down move. So and this buy took liquidity, okay? It took liquidity from these highs. Just a little bit of liquidity. It took it. Let me just highlight that. From those highs, it took that liquidity and we dropped down. So I entered from here and we started to come down. Then I saw that okay, there is this buy candle. Okay, that did not highlight. I saw that there was this buy candle and I also entered from here. When price came back, I also entered from here. Put stop loss above here. I entered from here. Put stop loss above here. All my drawings just disappeared. This is weird. Okay, so I entered from here. My drawings aren't showing anymore. But anyways, I'll just go on with the video and maybe it's a kind of error. So I entered from here and let me see if this indicator is going to appear. I'll just refresh the page. right, sorry about that, guys. It was Wi-Fi. I was having Wi-Fi issues, so I think I even left. I think I left something out. Yeah, I think I left something out. I actually entered the trade in here first, right? But I'm gonna leave that for another video. Let's just continue talking about this, okay? But I entered the trade in around here. You could see the head and shoulders. The head and shoulders telling us that we had a fake out. Then I entered the trade in around here to target this big candle, this big sponsor candle, this massive sponsor candle. So I thought we were going to sell into that, and eventually we did, and we even eventually took out the whole candle. Took out the whole candle, but I ended my trades around here. No, in and around here. I stopped trading. I stopped selling in and around here. But I'll leave that for another video. So basically, when we took liquidity off this point, right, and we engulfed that buy candle, I saw that entry in and around here to take it all the way. We could at least have targeted this point, okay? And I did target that point. I targeted that point, and from here, you're risking just about 10 pips to gain 24, 10 to 24, okay? 10 to 24 is like a 1 to 2 point something. Then, now that we had mitigated this, there was nothing was blocking us. Nothing was blocking all the way down here. Nothing was blocking us to go all the way down here. So, as price reversed, I entered here again. Let me just borrow this. I entered from around here. Stop loss was another 10 points and targeted all the way down here. I got another trade. That was, this was, oh, target 60 points. Target 60 pips. The first target was 60 pips for this one. The first target was 23, yeah, still 24. So the next target, so if you held from there, you'd have gotten 66 pips. So those are some trades I took. I still took some other trades, but I would share those on other videos. So please be sure to like and subscribe for more content. Join my free Telegram channel for free signals. And if you want to join my group of wealth builders, I build up people up to make income, to make wealth passively. You can hit me up and we could talk. So till then, till then, it was great having you guys. Thank you for listening to my video, and I guess I'll see you around and see you again.